Welcome to this week's analysis for the 27th of January to the 31st of January. This week we'll be looking at the Euro USD, the Aussie Dollar USD, the British Pound USD, USD Japanese Yen, New Zealand Dollar USD, crude oil and gold. As always, a quick disclaimer, today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. Here we have the Euro USD. As I mentioned in last week's analysis, our bias on this pair is bearish as long as price stays contained underneath significant resistance here of 1.12815 or around this 1.12407 or indeed 1.11800. So as I mentioned last week, we were looking for a price action signal to form around this 11800 resistance area here. Well, and in fact that happened in the form of this bearish pin bar just here, which formed at or around that resistance area, which of course capitulated and causing prices to capitulate down. We've had multiple another pin bar form, reverse pin bar here, again at a minor resistance area of 1.11050 and was rejected by the dynamic event areas in the form of the EMAs. So of course, again, all that has led to is a further push south. So we'd be looking to enter this market, looking for a retrace back up to around this 1.1105 or even higher, and we will target this area down here, the 109.296 area, somewhere around there. So we'll simply wait for a retrace to be able to sell on better strength. But my overall bias is very bearish on this pair. That's quite obvious really, as long as it stays, as I said, underneath this first resistance here, 1.11800, or in fact these other two resistance areas up here. But just to recap, we will be looking for a retrace between these resistance areas somewhere in the form of a nice perhaps reverse pin bar or a sucker setup, and then we'll re-enter the market, allow us to sell on strength, and we'll target recent support down here at around the 109, our first target 9. Cheers. Here we have the Australian dollar, US dollar. Again, according to last week's analysis, our bias on this pair is bearish as long as price stays contained under this significant resistance area of around 10300 level. We had an opportunity to enter this market based upon this bearish pin bar just here, which our clients, myself and my clients did. We had a limit order based upon this pin bar just here, because as you can see it formed at a significant resistance of around the 69260 level. So we entered the market based upon a limit on this pin bar. You would have had another opportunity to get into the market based upon this beautiful looking bearish reverse pin bar just here, which again formed at a static resistance area. And of course, our first take profit was down at this 68100 area, which was also now out of this trade. That was a nice little 1 to 3 risk to reward. Of course, there's been multiple pin bars since then. We have another rejected by the EMAs and again was pretty close to a resistance area of around the 68897 or thereabouts, this area here. So you would have had multiple opportunities to get short on this pair. Now, of course, what has happened, it's obvious. Price has just headed downwards. I got a lot of momentum behind it. So what we'll be looking to do as traders is look for a retrace somewhere back up around the 68897, somewhere there, or even higher, maybe back up to here to take advantage of the retrace. And we will, our first target will be this recent support down here and around the 67545 area. So again, I think there's plenty of pips on offer here. I'm out of this market now. I'm happy to take the 1 to 3 reward that was on offer, and I'll just wait now for a retrace, a nice price action signal for me to enter again on strength to short, again targeting either this 67545, depending what the market offers up, or even down here around the 67240, or potentially even lower around the 67755. But we'll wait and see what the market offers up. But that's my analysis on this pair. So again, I'm just going to wait for a retrace, and when the opportunity presents itself in a price action signal that we're looking for, we will re-enter the market and short this pair. Here we have the British pound US dollar. My bias on this pair is mildly bullish. I don't have a definite bias one way or the other at this point. We have been in an uptrend for about the last 5 months, since about August last year. So my bias is leaning more towards bullish. What we do have, of course, we have previous support here at around the 127865 area, remembering the areas only. We have another support here at around the 129090 area. We have resistance up here at 1.32549, and if you zoom out of your charts, you would see this area here was resistance going back from March last year, and we have this resistance here at around the 133490 area, again from March, long-term resistance from March last year. So what's happened over the course of the last couple of days, we had this false breakout here through this bearish pin bar or sucker setup, if you like. That may result in price heading back down to either one of these support zones here or here. Now if that happens, and if we get a significant buy signal, it'd have to be significant, then we would look to potentially go long on this pair, targeting back up here at around the 132549 or even higher. But it would have to be a significant buy signal. I'm neutral really on this pair at the moment. It's just going sideways, catching its breath. So we'll wait and see what happens. There's no action to be taken here on this pair as yet. So again, it's a wait and see game. If we get a significant buy signal at either one of these previous supports based upon this sucker setup forcing prices to happen, then we'll make a decision based upon then. But for now, there's nothing to do. It's just a wait and see game and see what the market presents us. If we get an opportunity to go long, we will. Or if in fact, should we get a break below this previous support, well then that's another kettle of fish altogether. We'll wait and see what happens then. Thank you. Here we have the US dollar Japanese yen. As I mentioned in last week's analysis, if we get a break above this previous resistance here of the 109,700 area, that could capitulate prices higher. Well, indeed, we did get a break and a close through this bullish candle here, but it didn't result in much. So as we can now see, price came up to around this 110225 and just started capitulating back down again. So I don't have an overall view on this pair. I am mildly bullish, just based upon that fact that we did have a break of this consolidation period or area, which has basically been between this 107.92 to around the 109,700 area for the best part of about 4 months or so. So at this stage, there's no price action to be taken. This support area here, as I mentioned last week, this 107.922 or thereabouts, is interesting to me. I'm going to wait and see what happens around this support area. As you can see, we had this huge bullish pin bar form at this event area, which of course caused prices to go higher. So I'm going to wait and see what happens around this 107.92 area, just to see whether we do get a buy signal or in fact a close below it. So again, that will dictate my bias on this pair. Again, I am mildly bullish, but it's a wait and see game. There's nothing to do yet. So if we get a buy signal around this 107.292 area, then it'd have to be significant. Then we would retarget probably around this 109,700 area. It's been bouncing off that for the best part of 4 months or so. So we'll just wait and see what happens. Again, if we get a close below this area here, well then we'll judge it then, and we'll make a decision or a bias based upon that. But for now, there's nothing to do. It's a wait and see game with this pair, so we'll just wait and see what the market offers up for us. Hello traders, this is the New Zealand dollar US dollar. As I said last week, my bias on this pair is bearish. We have, just to recap, we have resistance here at around the 67515, and we have longer term resistance at the 67864. Long as price stays below the 67515, in my view, as the new resistance, then I'm bearish on this pair. Myself and my clients are in this trade, as you can clearly see. I'm not going to tell you how we entered it or when we entered it, but we did have a series of inside bars here, and that was supported by a sucker setup on the 4-hourly chart. So we've entered this market short, obviously, and as I mentioned in my analysis last week, this recent swing point of around the 65665 was not a danger area per se, but if we got a close below this, then really there's not too much to indicate it wouldn't hit our take profit, and our take profit is here at the 64853 area, around there, based upon previous support if you zoom out of your chart. So we're well and truly in this trade. We do now have, as you can clearly see, a bearish candle has closed below this previous swing point here. So I see no reason at all why we wouldn't hit our first take profit of this 64853 zone. And then of course, should that happen, we have a decision to make. We could either re-enter the market, we could pyramid our positions prior to hitting our take profit, but I would think we're going to be heading way back down here. So there is a lot of pips on offer if you're prepared to wait for the right entry. So we are in this trade. My bias is bearish, so we will wait for, well, we're actually in the trade, so we'll wait for anything. But if not in this trade yet, you can certainly wait for a pullback to around this 65665 area here, which again was a previous swing high or swing low, resulting in an upward movement. So you'd be waiting for something like that to happen if you haven't entered the market short on this pair already, and there'd be nothing to suggest that you wouldn't be retargeting somewhere way down here. So anyway, that's just my view on this pair. Again, we're in this trade. It's looking fabulous. So I'll keep you updated with next week's analysis on how it turns out. But for now, you'd want to be on the short side of this pair for sure. Here we have crude oil. As I mentioned in my analysis a fortnight ago, I was mildly bearish on this pair back then. Obviously now I'm bearish on this pair. As long as price stays below this, well, this is the most significant resistance here, 63.30, around that area. But this here, this 58.67, this is the line in the sand as far as the bears are concerned. So as long as price is contained below this 58.67, my bias is, excuse me, bearish on this pair. As I mentioned a fortnight or so ago, we had this huge bearish pin bar form, doesn't get much bigger than that, at a previous resistance area, and that was my reason for taking the mildly bearish bias on this pair. As we can see now, that has just capitulated in price, continuing just to storm downwards. A lot of momentum down here. So what we are looking to do now, we have support here around the 55.03, 135. So whilst we don't have a clear price action signal amongst all this here, we will still wait for a retrace up to around this 55.03 or even higher, and then we are without a doubt down here at the 51.35. Here's an interesting thing. You can see here how price is trading away from the EMA, just here. How far it's trading away from the EMA, that clearly indicates that the sellers are way in control. You don't need the candles to tell you that. The fact that it's trading away from the EMAs indicates that the sellers are in control, which is fine by me. So I'm going to wait for a retrace around this 55.03, or even up here somewhere around the 58.67. Again, this area here, this resistance through these candles here, we have a little bit of a support here, new resistance around here. This area here is key. As long as price stays below this, I am short on this pair. Well, sorry, I should say I have a bearish bias on this pair. So I'm going to wait, because patience is king. I'm going to wait for a retrace for me to get short, and my clients, I'll send them the setup on oil. But it has to be around this 55.03, as I mentioned, or around this 58.67, or somewhere in what I would call the sell zone. Now, we're not just going to enter because we have a signal there. There have to be other confluent factors, but we are waiting for a retrace to be able to sell on strength, and we will be targeting this around this 51.35 recent support area. Here we have gold. As I mentioned in last week's analysis, my bias is bullish on this pair. My clients and I are now in this in gold. My clients now are in this trade. As you can clearly see, we entered the trade based upon this beautiful looking right here sucker setup. We had a great looking bullish reverse pin bar form at a previous horizontal resistance area. So we entered the trade based upon this. We entered it as a sucker setup. I'm not going to get into that with you now, but my bias on gold is bullish. We are retargeting back up here the recent high of around the 1608 area, as you can clearly see. So there's not too much to report here. You can see that price has been respecting the 8-day EMA. It's been trading above the EMA or being rejected by the EMA. You'll also see, let's erase that this beautiful looking bullish reverse pin bar formed within the trade action zone between the two EMAs. So given the fact that we have the trend on our side, we have the signal, we have it form at a level which is previous resistance, and the other confluent factor is, of course, it formed within the trade action zone, and since then price has capitulated back up. So I see no reason, now of course I'm not the prediction business, but I see no reason why we wouldn't be heading back up to the recent high. Price often goes higher and lower than you think it's going to go. So I'm glad that we're on the bullish side of this trade. It's working out fine for us right now. So I'll keep you updated in due course, but I do have a bullish bias trade. So if you're not in this trade already, clearly you could wait for a pullback down around again at this previous resistance, or even lower. I wouldn't want lower, that takes us out of the trade, but a pullback to around here, the 15510 level, to wait to go long to retarget this recent high here, I think would stand you in good stead. So we're in this trade. That's my view on gold. There's not much to report, but we do have an upward movement based upon this recent, right here, sucker setup, which capitulated prices higher, and it's now been, of course, rejected multiple times from this static resistance area in the form of these three bearish looking candles, bullish looking candles right here. So that's my view on gold. I see no reason why I won't hit our take profit. Again, I'm not in the prediction business, but for now, you'd want to be in the long side rather than the short side of gold, in my view.